This video will show two examples of how the Section 179 deduction can be useful in purchasing energy-based devices for your practice. As a reminder, MRP and its affiliates do not provide tax, legal, or accounting advice. This material has been prepared only for informational purposes to give general information about reducing business taxes by taking advantage of the Section 179 deduction, which is associated with the purchase of capital medical equipment. The video is not intended to provide and should not be relied on for tax, legal, or accounting advice. The tax code is complicated and may have changes. Therefore, you should consult your own advisors to determine the applicability of Section 179 to you. As mentioned, we'll show two examples in this video. The first one is an established dermatologist who started with a platform system but is now expanding to purchase 3 specialty energy-based devices from MedRepPro. The second example will be a younger dermatologist who's leaving academia to establish a new practice. Therefore, they're purchasing a multi-application platform from MRP. In the examples, you'll see 2 columns. The one on the left is the effect without the Section 179 deduction, and the one on the right shows the effect with the Section 179 deduction. According to one source, the median income of an established dermatologist is about $285,000 in the United States. And if they were going to buy 3 systems from MedRepPro, totaling $120,000, you can see that there would be a Section 179 deduction of $120,000 from their income. Therefore, the net taxable income with the deduction is $165,000, shown on the right, versus $285,000 of income, shown on the left. Now we need to understand what is the tax effect of this net income. So we'll look up on the tax tables to find out how this applies. In this case, we're using the married filing joint and look at the $285,000 and find that there's a 24% tax rate on the income. Likewise, with the Section 179 deduction, the $165,000 falls in the 22% bracket. To determine the taxes, you simply multiply the net income times the tax rate and find the taxes that would be due if you didn't have the Section 179. And by comparing the two, you can see that there's a pretty significant amount of savings. In fact, it's $32,100 from using the Section 179 deduction. Therefore, when you compare this to the purchase, it has the effect of only a $87,900 purchase versus a $120,000 purchase if you didn't take the Section 179 deduction. In effect, the government is almost like giving you a discount of almost 27% off the purchase of the medical equipment. Now let's turn to the second example. In this one, this is a younger academic dermatologist coming out to establish a new practice. So they have a lower income of $177,000 according to the source. They're going to buy a multi-application platform for only $60,000 from MedRepPro. Therefore, it has a deduction which has a net income effect of $117,000 with the Section 179. Again, we look up their tax rate by using the tax tables and find that one would be 24% while the other would be 22%, thus having a net income tax due of $42,000 or $25,000 depending on whether you have the Section 179 deduction. Therefore, if you look at the savings, it's about a $16,740 savings from the Section 179 deduction. Again, compared to the purchase of $60,000, this means that the net effect would be $43,000 or almost a 28% reduction in the cost of the equipment by using the Section 179 deduction. We hope this video has been helpful in giving you some understanding to the Section 179 deduction. If you need more information, please contact your accountant or tax professional or visit section179.org to get additional information.